Hi, welcome to this video update, which is on the 28th of September. We're on Saturday. We're just going to give our updated outlook and forecast for the euro. We're going to look at the euro against both the US dollar and the Japanese yen. We'll go and look at the charts in just a moment. Now, in terms of the euro, in recent videos, just been saying, just out and out bearish long term. Euro's got limited upside and big potential downside. Now, Euro USD did come down a little bit last week, but the volatility is still low. I think that could pick up in the coming week. There's a big event coming up on Monday for the euro, in my view, which I'll discuss in a moment. Now, in terms of euro JPY, it's been a great downtrend for a year now. You've seen the euro have a little bit of a bounce. That bounce is a great selling opportunity in our view. Right, now what we will do is we will go and look at the trade setups, but please do keep in mind, it is my view as of this moment in time. It can of course change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, including the two we're going to look at right now, you can get live access to our member center by simply clicking the link beneath this video. Right, now in terms of trade setups, the first one we're going to look at is Euro USD. Right, Euro USD daily chart. I'm not going to do the weekly chart in this video. I've done it in previous videos. We've got targets of 104.50, then 100 if you're a bear. The way we see the fundamentals, we're certainly obviously bearish. Hundreds easily on the cards in the coming months. 940 pips from where we are now. We can even run down to 80. In terms of the chart, technically, we're near historical low volatility. Okay, so it's not been a fast-moving volatile pair, but the trend is down. I think the volatility is going to pick up. There's been two instances where we've had euro USD volatility near historical lows, and it's broken in favor of high volatility to the downside. I think the same is going to happen again. We'll do the technical levels in a moment, and the real key level, I think, for institutions to keep in mind. Now, in terms of the euro fundamentals, for us, clearly bearish. We feel sentiment of a lot of money managers, economists, and the media is too bullish. Let's just go through the points. Germany in recession. The zone is about to follow next few months, and there'll be no turnaround. It'll face a long and deep recession. I think it's going to be a bit like Japan. Okay, when Japan had that really massively long recession. Point number two, this is where people are too bullish on Eurozone. Manufacturing PMIs came out. Anything under 50 is, the economy or manufacturing is contracting. Came in at 45.6 in September, down from 47 in August. And we were saying before the report even came out, no chance of it being above 50, and it'd probably be worse than the previous month, which of course it was. But look at the forecast, 54.3. They're putting it, economists, in expansion again from contraction. Why would it turn around that much in a month? All the data you see coming out of Eurozone is bearish, and they're getting that wrong as well in terms of they're too bullish. I just do not understand how they got that optimistic figure. When it all came out, all the manufacturing PMIs, obviously the services PMI as well. These commentators are all pointing to the services PMI being above 50, and Eurozone is still bullish because, and this is the logic, if the global economy recovers and returns to growth, then Eurozone will return to growth as well. Well, we can just look at the global economy. It's not returning to growth. The slow up is big and it's accelerating. Also, China, major export market, particularly for German autos, that's slowing up at an alarming rate. So the global economy isn't turning around, neither is Eurozone's economy. Now, the ECB are aware of this. They've come in, they cut rates at the last meeting, they did some stimulus. It's going to be ineffective. They tried it for years, it didn't work. They stopped it briefly, and now they've brought it back to hopefully kickstart the zone. It didn't work for years, so why is it going to work now? Well, many commentators still remain bullish on the zone because they say, well, to help the ECB, potential fiscal stimulus is coming from governments and structural changes. So fiscal stimulus directly in the economy, structural changes to make economies more competitive. Mario Draghi said in his meeting this is what he wants. Is he going to get it? No. He's been asking for this for years. He hasn't got it. He's not going to get it now. They're not going to do it. Okay, so it's going to rely on the ECB to try and stimulate the zone with a policy that kind of failed before and will fail again. Okay, so, for us, really bearish. Okay, but we need something to pick up the volatility. And that might come on Monday with the World Trade Organization verdict on the US case against Airbus. The US have claimed that Airbus got too much help from the EU and it's unfair trade practices. Now, the rumor is that the WTO on Monday are going to find in favor of the US. Now, the US have asked to impose 11 billion in tariffs on Eurozone if the verdict goes against Airbus. That's the request, but insiders who leaked information to the press say it's probably likely to be 7.5 billion granted. Now, Trump doesn't have to impose these tariffs, of course, but from Trump's point of view, and we know his verdict, not his verdict, his views on trade, he feels the US is being unfairly treated by a number of nations. So I think he'll gleefully put the tariffs on. And if the rhetoric or there's any retaliation from Eurozone, he might decide to go after Eurozone autos, which would be a major blow to the zone. Okay, so it'd be interesting to see if the verdict goes as the rumours are saying online from the insiders, and what Trump will do, what will happen from the EU side. Also, the EU have a similar case against Boeing, saying the US government has given them too much help. Unfortunately for Eurozone, that case doesn't get decided for another 9 months. It'd just be very interesting to see what happens on Monday, but it won't be bullish for the euro if the WTO fines against Airbus. Okay. What else have we got? Point number 5, the interest rate carry will cap any euro upside. The reason for this is you've got negative rates in Eurozone, quite healthy interest rate in the US still, even though we've had a cut. And that carry becomes very valuable. Let's say if you go 20 to 1 leverage, you can pick up 30% plus on the carry, and the euro's going down. Okay, so you've got some capital appreciation as well. So that interest rate earning for big institutions who can really leverage up, and they do, means that if we start to rally, they'll just hit it for the carry. Now, in terms of the technicals on this chart, very messy, as I've said. We've been trading it short since we came down off the 114 level. Came in at 113.80, a lucky trade. Then when it gets through the 20-day moving average, we're looking for this average to hold rallies, or rallies not to get too far away from it. And you can see it's not getting away from the 20-day moving average. It keeps falling back, just getting a little bit above it. Our latest trade, actually, we got stopped out on our first one on this big blue through the 20. We then came straight back in on that red, and we're still in from 111.80. So basically 240 pips. It's taken a good few weeks to get down to where we are now. But from our point of view, you've got that nice carry on your side as well. Someone I know, I think I've mentioned this in a previous video, said the euro is the safest trade in Forex. Such limited upside, such big downside potential, and you're cushioned by the carry. Now, when he said safest, obviously in inverted commas, so to speak. But ordinarily we would trade more volatile pairs. Say like Euro JPY. We like volatility, but this pair we've got quite a reasonable sized position on, just simply because of the upside being limited, downside potential being so good. So looking for now the volatility to increase. We'll see if it does. But in terms of levels, the euro doesn't have much upside. Just draw trajectory there. You've got 4 candle bodies there. Red holds, red, blue, big red down. Okay, 110 around number, 20-day moving average there. looks good resistance in our view. So if we come up to this level or through it, be a sell straight back through. Key level for us is the 111 level, so our stop is behind. That level there, I think if we get taken out and stop, we're at 111.25. Then we can reevaluate. So, you know, the big fundamentals may have changed or whatever, but you know, I just don't see that level getting taken out at the moment. This present moment in time, taken 50% of our trade off the table, and I want to put it back in. Obviously, on a rally if it occurs, hopefully get back in at a better price, or if we break lower. And what you can see here is candle tail, they're just poking at a round number. Okay, this one got lower, then immediately rebounded. My own view is it's below the round number where the big order flow is, so take out 108.80 and see if she runs. So sell on a rally or a break lower. If we started to run down away from 109, obviously 108.80 I think would be a good level to come in, just clear of round number turbulence. We got below 108.50, the stop could be something like 110.50. We'll see how that goes in the member center. We don't exactly know what's going to happen yet, but for us, limited upside, a lot of downside. You've got decent carry on your side as well. Now, in terms of one of our favorite trend following trades, which has got our biggest position size on it, is Euro JPY, which we're going to take a look at right now. And I think it looks really attractive trade if you want to come in now, because the Euro's had a little bit of a bounce. So let's go take a look at Euro JPY. All right, just on the Euro JPY monthly chart, just very quickly, because there is a key big level on this chart. Now, in terms of following long-term trends, this has been a nice one for us. Being bearish all year, trading the short side whenever we can, come down quite nicely. The key level is here. Massive institutional level. Got a brief poke through on that hammer there. Come down, one body, two body, three bodies, holding the 120 level. We snap it on that red, come back to test on the blue. But I don't think we're going to be getting through 120, okay? So keen off the level, if you want a good long-term trend, it's very attractive to key off the level. The downside potential is really big in this pair, in our view, down towards the 97 level basically. So that is a lot of decline, okay, or big decline if it comes off. The way the fundamentals and sentiment look in terms of this pair, just so bullish of the JPY over the euro. Now, in terms of, you could say, well, there is some support at 100 maybe. Well, if you got to 100, it'd be doing pretty well, wouldn't it? But I just do not think this level will hold. Coming months, long way to go on the downside in our view. Right, let's go to the daily chart. Right, Euro JPY daily chart, and you see the big trend is down. And in terms of when we snap this 20-day moving average, okay, holds, you only get brief pokes above there, holds all the way down to 116. Then we get the rebound. 20-day moving average snaps, we get taken out of our short trade. But we're saying in our previous videos that basically 120 level is a tough level for the euro to get through. We've seen it on the monthly chart. Just let me draw the level in. So there's the 120 level. And you've got this defining candle here. Defining candle is high volume on heavy institutional order flow. Defining candles can be seen in all yen pairs. I did a video on definition candles last week, and go and check it out if you wish. But that's a very important candle, 120, a very important level. Also, the video last week goes to the reasons why we're so bullish of the yen. But in terms of the 120 level gets poked down, and now we're 200 pips lower. Now, in terms of the euro, big downside potential in our view. You can sell it on rallies or breaks lower. So let's have a look at some levels. Okay, so there's a trajectory, and it will line up with basically there. That candle after the ECB that managed to get back up. Then we come through on the red. Rejection here, down. Can't get through, down, poking towards. So you've got double trend line there. It's about 108, sorry, 118, 60 or 70. So rally up there, look for price action to fade. You get in shorter. If we ran on up towards 120, just take any sort of bearish action off the big level. But what if we don't rally? Just go through there. It actually lines up with that, sorry, that tail on this big high volume candle as well. So through there, these candles here I don't think will provide any support. Off down to monthly support. Now in terms of stop, not too close to 120. I've got it through or behind the body of the definition candle or defining candle. So if I could draw my line straight. There we go. So yeah, a lot of downside potential. Now a lot of traders will think, well, I want it to rally a bit towards the 120 level to get in. That's all well and good. If it does rally up there, you can do that. But don't just go for the rally. A lot of traders do this. Yeah, this, we think it's going to be a big trend. Take the break lower, because that will be a high odds entry as well. Just thinking in terms of the downside potential against the risk here. Obviously our view's got to come to fruition, but a lot of potential. Okay, now in terms of both pairs, they've done well for us. I hope that that's going to continue. We'll see. We'll obviously update these pairs in a future video, or you can follow our views daily in the member center. But in terms of the video, that is it for today. Thank you very much for watching me as usual. Take care. Have a good day.